How to reduce bounce back loan repayments. Hello there, my name is Andrei Smolenko. I'm a debt advisor and director of Insel Baltica. Today a Facebook Live that will be particularly useful to company directors, self-employed and sole traders, those business people who have taken out bounce back loan for their business. And the time has come to start repayments for the bounce back loan. And unfortunately, it's not going to happen. Today, we're going to talk about the options that are available to you that you can use as a tool that would help you to reduce your monthly payments. Let me tell you about myself. I've been company director for the last 15 years, running my business that's based in Manchester called Insel Baltica. The business specializes on providing advice and assistance to company directors, self-employed and sole traders, business people who work in various industries, in particular construction industry, transportation and beauty. Based on my experience, in particular in those three industries, I'm going to share with you the knowledge that I have and the practical stories of my clients. Perhaps listening to those stories, you would be able to gain better understanding of what you can do to reduce your monthly payments if you are struggling to pay for that. Let's start from basics. Let's talk again what the bounce back loan is. Bounce back loan is the government-backed credit scheme that has been introduced by the UK government in 2020 in order to help businesses in the UK who suffered from COVID-19 pandemic. According to that scheme, businesses could take up to £50,000 with interest rates of 2.5 APR. You would need to repay your bounce back loan within 6 years, 1 year, no payments at all, and then 5 years of the payments you would need to make. So on average, if your business has taken out £50,000, you would need to make repayments of about £950 a month. Well, all things good when there's no problem with repayments, when your business has successfully recovered from pandemic and you have turnover, so clients paying money and then you can make those payments. The other story is when you spend bounce back loan money and you cannot make payments. What you can do. This is what we're going to talk about in today's Facebook Live. Important thing to bear in mind that it's not only me talking, not only me telling you what I know about this subject matter. It's about you participating, writing comments and asking questions. In that way, you can get much better outcome from this Facebook Live. This Facebook Live is not legal advice. I'm not giving legal advice today. I'm providing just general information based on my personal experience. So opinions are my own. Let's get back to the average client that I would normally deal with. Let's listen to the story. That would be a construction company director who ran his business for about 3 to 4 years prior to pandemic. The annual turnover was fine, the business was booming, paying subcontractors, suppliers, and making decent living because of the company. When pandemic hit in March, April last year, the business suffered substantial losses. Simply lost contracts, lost people, there was no work at all. The business then director decided to take out bounce back loan of £50,000 because annual turnover let him do it. The important thing to bear in mind at that point that in some cases the business turnover was overestimated. What exactly that means? We all know that, especially those who are taking out bounce back loans and reading news and listening to people within the industry, that unfortunately bounce back loans have been just given away without, for the banks providing proper checks. They did not know their clients and they believed to most of the people without checking what they say. According to bounce back loan rules, really strict rules, you could have taken out only up to £50,000 or, important thing, maximum up to 4 times. Your business turnover had to be divided by 4 times. So if you taken out £50,000, your business turnover had to be more than £200,000. This really important bit. Let's say our company director has taken out £50,000, his business turnover was fine. He spent the money on business-related expenses. He's been paying salary to some of his staff. He employed CS subcontractors and been paying them as well. Suppliers, lease, advisors, and so on. He could even pay a decent but moderate wages to himself. So 50 grand has gone. Now the time has come to start making payments. What company director could do? The first thing to do is apply to the bank for so-called pay-as-you-grow scheme. Pay-as-you-grow offered by all bounce-back loan providers in the UK. So your bank who lend you money, they have to try to help you. They have a legal obligation from the government. And what you could do, first, you could get a payment break or payment holidays up to 6 months. 2, you could extend your loan repayments up to 10 years. That would halve your monthly payments. Let's say from £900, about £50 to about £500 a month. That could help. Also, you could get 6 months interest-only payments, where you would be making only interest payments without repaying the capital. So on £50,000, that would be about probably £100 a month. That is helpful too. So all those options are available to company directors and also to self-employed. What you need to do, if you want to get it, you need to send a message on online banking to your bank. What about the help they can provide? Or you can Google it. Just Google Pay As You Grow scheme. Pay As You Grow. And you will get the results. The question comes is when still, after extending your loan for 10 years, your business cannot afford monthly payments. Let's say you suffered substantial losses and still unable to recover. Money has been spent and now you are facing payments of about £450 a month. You've taken out a payment break for 6 months, still it doesn't help. Now payments due. What you can do next? Under those circumstances, you could try to negotiate with your bank about reducing monthly payments even further. Based on your business turnover, based on your current expenses, you could argue or negotiate about reducing payments to maybe £200 a month, or even £150 a month. Yes, that's true. Bank does not have to accept a long-term agreement. However, they may be willing to negotiate and agree for those reduced monthly payments. It's based on case-by-case study. So there is no general policy for all the banks to accept lower monthly payments. They don't have to do it, basically. This is what we do for our clients. When client doesn't want to file for bankruptcy or company liquidation, they think their business is still viable and they have an intention to trade, continue in business, but they need a relief. They say, well, look, we need a 6 months break. We can't pay £500. We can pay only £200 a month. that's when we can negotiate with the bank and agree on lower monthly payments. We successfully helped a number of clients in construction industry, in transportation industry, lorry drivers, and a number of people who involved in catering industry. As we know, some pubs, bars, restaurants, cafes suffered substantially during COVID-19, and we work with them as well. A few beauty salons as well, not only company directors, but self-employed people who've taken out bounce back loans. They need help. They need professional assistance in making sure their interests are protected and their case put forward to the bank about how much they can pay on a monthly basis. Just give you a few examples that outcomes for the clients. That one, continuing with the construction business, limited company director, his monthly payments after reduction by the bank were about £540 a month. We managed to reduce his monthly payments to about £220. Another successful case, it was the self-employed, running his business in form of cafe, so I used to sell sandwiches, beverages, drinks, coffee, and so on. Again, business didn't go according to the plan. Bounce back loan, £25,000. Now he's repaying about £160 a month. Those two cases, just a few cases that we dealt with successfully in our client's behalf. You need to bear in mind that it's not debt write-off. It's not debt forgiveness as such. What that program means, that say temporarily, maybe for 12 months, for 1 year, you would need to make reduced monthly payments. If your circumstances doesn't change, then you continue making all those payments until, presumably, the loan is repaid in full. You can make top-ups, so 1 month's better, 1 month's worth. You can make top-ups and it will count towards your payments. However, in practice, there is no write-off of that debt. The legal options that's available that could help you to write off your bounce back loan together with other business debts is bankruptcy, if we're talking about self-employed people where debt's written off within 1 year, company liquidation for limited companies where company is ceased to trade, assets shared amongst creditors, and again, debts are written off, including bounce back loan. That would take typically between 3 to 6 months. It's a more complicated process, however, and needs to be looked very carefully. But idea is there. Bounce back loan is exactly on the same level that as company overdraft, for example, business overdraft, debts to suppliers, lease payments, car finance, and so on. So there's no preference. And because it's government-backed loan, it's treated in exactly the same way as any other creditor. And bounce back loan can be included and needs to be included in your bankruptcy application if you are self-employed or into the application for your company liquidation. It must be there. Yes, there are disadvantages for all those procedures that need to be looked up very, very carefully. In terms of self-employed, you personally, in a way, liable for bounce back loan, and your assets, if you have property, may be at risk. That may be sold if you are filing for bankruptcy. That's true. In some cases, if company director files for their company liquidation because they cannot repay bounce back loan, their actions will be taken into account very, very carefully by the liquidator on 2 main points. The point number 1, when at the time, as a company director, you decide to take out, let's say, £50,000, was your business turnover for the previous year over £200,000? So was your turnover 4 times more than the bounce back loan you've taken? Really, really important factor. And point number 2 is how you spend the money. Whether you spend the money really on company business, where you've been paying wages to your employees or perhaps subcontractors, buying materials, paying specialists for professional advice, paying lease, electricity, gas, and so on and so on. If those two main questions are answered correctly, yes, then you have nothing to worry about. As a company director, you fulfill your duty, and then you could think about company liquidation without any negative effects to yourself. However, if your company income or turnover was overestimated and some of the money from bounce back loan went, let's say, not directly to the business-related purposes, perhaps you repaid your own loan, the money you invested into the company, you decided to pay yourself back. Or you invested money into some other projects. Perhaps you withdraw money to buy yourself a car or put up money as a deposit for the property. Those are, strictly speaking, not business-related expenses. And in case of company liquidations, liquidator will have to look into recovering, if not all, but some of the money from you. So those things, in my view, are really important to bear in mind when you make a decision about company liquidation, or let's say company bankruptcy, or your personal bankruptcy if you are self-employed. Yes, those two ways of writing off debts are just tools, just legal tools that, in my view, needs to be used very carefully by business people. There are a number of options as well. They're called company voluntary arrangements for limited company or individual voluntary arrangements, where you make contributions to cover your debts, normally for 5 years, you continue trading, and then remaining of the balance written off. There are some disadvantages as well, but in those cases, you could probably receive a partial write-off of your debts, maybe up to 60 to 70%. Yes, those debts can be written off, but that would take 5 years. But in case of bankruptcy, 1 year, that's written off. In case of company liquidations, 3 to 6 months, company cease to trade, debts are written off as well. Again, all those options are available, and in my view, there is no general rule of thumb that can be used to every single business, because every single business is unique, and only business director and probably business owner know exactly what offenses or what wasn't exactly nice and smooth in the business. So this is why we need to look very, very carefully at every single case scenario. In summary, options available if you are unable to repay your bounce back loan and you want to reduce your monthly payments. Options number 1, applying directly to the bank for pay-as-you-grow scheme. Perhaps extending loan for 10 years and reducing your monthly payments, taking payment break for 6 months. Option number 2, if you've done that, or you think plus important, you don't have to do it, if you decide it's not viable, so it's no good, no point for your business to continue trading, as a company director or self-employed, you can go for bankruptcy. You can apply for company liquidation or just personal bankruptcy if you're self-employed. Option number 3, you could consider alternatives to bankruptcy, where you repay your debts within 5 years and you can write off just a bit of that debt. And one more option as well, option number 4. The option number 4 is when you negotiate. You can do it by yourself, or you could use, for example, our professional help as well with your bank about reduced monthly payments for bounce back loan to the minimum, absolute minimum, something that you can really afford. And why option number 4 these days is most popular? Well, the thing is, when on our client's behalf, for example, construction worker, we reduce monthly payments to about £220 a month. This is exactly what our client wanted because he wants to continue trading his business. He is hoping for more contracts. Construction industry apparently is growing these days. It's a lack of labor. However, the contracts out there. So he's hoping to get back on track and start making money within 6 to 8 months. Then for him, reducing that payments to 200 is exactly what he needs, exactly what he wants. In 12 months' time, there is the prediction that the government will have to look at all the options available for self-employed and company directors who have taken out bounce back loan again, because hundreds of thousands of businesses, according to the Office of National Statistics and estimates, about 700,000 UK businesses will not be able to repay bounce back loan when the payments fell due. 700,000. So when those companies and businesses start missing their payments, that will trigger the government to look into further financial relief for those businesses. By further financial relief, what I personally mean, first, perhaps they could offer more loans, more cheaper loans, give it to the businesses so they could partially service bounce back loans and use some of the money to continue their trading. And option number 2, perhaps they would say, well, look, what we're going to do, we're going to say we can write off some of that debt. There are calls and more calls for the government to make a legislation or make new rules where some of the bounce back loan may be written off under condition that the bounce back loans have been taken out correctly. The businesses can prove their business turnover and can prove how they spend their money on business-related purposes. So those are still things to come. We don't know if it's going to happen or not, but decisions we need to make now. All the purpose of all this Facebook Live is just to give you more tools to make the right decision when your business is struggling with making monthly payments. If you have any questions, if you have any comments at all, please write them now. Then I'll do my best. I'll try to answer them when I can. Just to remind you, if you are interested in free half-an-hour, no obligation consultation based on your business circumstances, sign up on our Facebook page Insol Baltica, and you could receive advice that could let you understand what your position is, what options are available for your business, pros and cons, and then you could make a better decision in relation to whether to trade, whether to continue with your business, whether to get reduced monthly payments, or to close your business down in a legal way. So sign up for half-an-hour consultation on our Facebook page Insol Baltica. Since we have no questions, I want to say thank you to everyone who made this time on Thursday evening. I know it's a bit late, I know it's Facebook, many other interesting things out there. Nevertheless, I have a feeling that at least I tried to give you a better understanding of your rights as a business owner. We talk about options available. We talk about a few cases that we dealt with at the company for our clients, perhaps something that we could do for you as well. Facebook Live about how to reduce bounce back loan repayments and your options, how you could write it off using one or perhaps more legal tools. Thank you very much for watching, and I wish you all the best. See you later.